Maybe you're new to trading the stock market. Maybe you've been doing it for a long time. There's a number of mistakes that most beginners make, and this week I want to share those with you and emphasize why it's so important to avoid them. And then, of course, we'll do my normal market analysis. We've had lots of negativity in the market in the last little while. The question is, will that weakness, will the stock market crash continue? Well, I'll show you what to look for in my outlook. And then finally, at the end of the video, we'll look at the swing trade of the week, a stock that had a great week despite the market weakness. That's all coming up. So whether you're a day trader, maybe a swing trader, there's a few common mistakes that I see in my students and people that are starting out in trading that are really destructive to their performance. And they may not be so obvious. Now, the first thing I want to talk about is an emphasis on fundamentals when you are actively trading the stock market. By that I mean if you're day trading stocks or perhaps swing trading, holding stocks for a few hours or maybe a few days. Well, I can tell you that the fundamentals, and by that I mean the company's business, what they do, their management, their earnings, all those sorts of things, those things are important in the long run. But in the short run, when you're day trading and swing trading, they really do not matter at all. When you're trading the stock market, when you're taking advantage of short-term volatility up and down, what matters more than anything is human psychology. You know, I'm often asked by people wanting to get their kids into trading, what should my son or daughter take in university? I tell them if they want to be an active trader, a day trader, a swing trader, they really don't need to worry a whole lot about learning finance. What they really should do is learn psychology, how people react to fear and greed, because those things are much more important in the short term than the fundamentals. Now, the next thing on my list of 3 beginner mistakes that really hurt is this failing to be a loser. And you might wonder, what the heck do I mean by that? Why would you want to be a loser in the stock market? Well, the good losers, the people that are good at losing, are the ones that do well. You see, in trading, you're never going to be right all of the time. You need to go into trading with that understanding. And many beginner traders don't want to take losses. They don't want to feel that pain. And so what happens is they end up holding on to their losers for far longer than they should. And a small loser turns into a big one. What professional traders, what experienced traders know is that your performance in the market should not be judged one trade at a time. You have to look at your trading in a basket of trades, like 20, 30, 50 trades at a time. You're playing a probability game. You're not going to be right all of the time, but if when you're wrong, you don't lose a lot, and if when you're right, you have big gains, then you can make money, even if you're only right 40, 50% of the time. That's a hard thing for beginner traders to get a handle on, because in society, of course, we're taught that if you want to get an A in school, you need to be right 80, 90% of the time. Well, that's not how it works in the stock market. And so what you need to do is learn how to control losses. And I'm going to show you at the end of the video a stock that had a great week this past week. And I'll show you where to put the stops, where to know when to take the loss. Because it's not enough to say, I'm going to use stop loss orders, or I'm going to plan to lose at a certain price or a certain drawdown in percentages. You need to put the stops at the right place. And so at the end of the video with our swing trade of the week, I will show you exactly how to do that. Now, now's a good time to subscribe to the channel. If you enjoy this sort of content, please click on the subscribe button, turn the notifications bell on. Let's get on to number 3 in my list of 3 day trader beginning mistakes to avoid. And that is something that is really not obvious to most people. And it's the failure to focus on abnormal activity. Now, what do I mean by that? Well, most stocks, most of the time, trade normally. If the market goes up 1%, a normal stock might also go up 1%. If the market goes down, 1%, most stocks will also move down. We're not interested in those stocks. If you want to beat the market, you have to find the alpha stocks. Alpha stocks are those that are trading on their own story. Now, the stock that I'm going to show at the end of the video is a great example of an alpha stock. It went up many times over this past week. Why? Because it had something exciting that caught the fear and the greed, well, more so the greed of investors, and that allowed that stock to move up many percent. You'll see at the end of the video just what a massive run it had this past week. Well, that alpha stock is the kind of thing that we want to focus on. We want to focus on stocks that are trading on their own story, that maybe have rumors, maybe significant news in the market, and it's become a crowd chasing after a stock. And that's where that crowd psychology comes in. People have this fear of missing out. They'll chase these stocks up 100%, 200%, and they can do these gains in a very short time period. So you might ask then, how do I know if it's an alpha stock? Well, the answer is very simple. If the stock is trading with abnormal volume, and again, I'm going to show you an example in just a moment. If it's trading with abnormal volume and it's making big price gains, then you know that you've got an alpha stock. And then it's a matter of picking the right entry points, and that's what we'll do with the swing trade at the end of the video. All right, now I want to get into this week's market analysis, and we do this every week. It's a good way to get on top of whether the market is helping or hindering you. So let's jump into the Stockscores website here. This is the chart of the S&P 500 on a 1 month, 60-minute time frame, and the trend is down. You can see that the trend was up earlier in the month, well, really at the end of July. So we had an upward trend here, and then we built a falling top, and we broke down right at the start of August. And ever since then, we've been in this cycle of falling tops. Now, the falling tops gave way to rising bottoms this week, right here. However, the market hasn't quite broken the downward trend line in decisive fashion. It tried on Thursday, you can see there it tried, but it failed. And so then the market fell off quite sharply and then bounced back at the end of the day on Friday. Now, if we can break this downward trend line, if we can get above this and we built this little rising bottom here, then we should see the market start to recover. That hasn't quite happened yet, so we still have to have a bearish outlook in the short term, but we are at a point where we could reverse the really awful month that the market has had in the month of August for those large cap US stocks. Let's take a look at the long-term time frame and we'll see some hope here. This is the 3-year weekly, and here's your upward trend line. I could also draw it sort of like this, cutting across this bottom as well. Notice that we had run up and away from the trend line, and we've now pulled back to it and managed to close above the open this week. So that's a decent sign that the market's going to try to bounce back and move up next week. Now, it doesn't really have seasonality on its side, because typically at this time of year, as we go into September, the market is quite weak. Some might say, though, that we've already had the weakness that we would normally get in September. We've now had that in August. I'm not sure what the right answer is. I just prefer to do what the market tells me to do. And what the market's telling me to do is be somewhat cautious, but still, we do have potential for a bounce back next week. So let's watch that short-term chart that I showed you in just a moment, or I showed you a moment ago, very closely. If we can break that downward trend line, we should see the market try to bounce back toward these highs in the next couple of weeks. Hasn't happened yet, but that's what I'm watching. All right, let's take a look at the NASDAQ market. QQQ is the symbol. Very similar chart. You can see it's in a downward trend. Quite a bit of volatility here. Volatility means uncertainty. So investors showing some uncertainty. The upward trend is still intact. How about the small cap market? It has not kept up with the large caps, whether it's the NASDAQ or the S&P, still in a downward trend in the short term, and the small caps don't have a rising bottom. So if it were to break this downward trend line, it's not as solid a signal that the market is reversing. Now, why is that? Well, the small cap stocks are more susceptible to rising interest rates. And through the month of August, we saw interest rates, as defined by the bond market, move up quite a bit. And so that's why the small caps have underperformed The large caps, companies like Apple and Google, they don't need to borrow money. They have lots of cash. It's the smaller companies that need to borrow money, and some of them may get offside on their debt because if they, took debt out at 3 or 4% in the last few years, and now they got to renew that debt at 8, 9%, that's a big impact on their earnings. And that's why we're seeing these small cap stocks suffer more than the large caps. Okay, let's take a look at the Canadian market. T.XIU is the symbol. Again, downward trend in the short term, so bearish in the short term. And in the 3-year time frame, you can see that we are stuck in this sideways channel or rectangle consolidation. If we break up to the upside, that's bullish. If we break to the downside, that's bearish. Right now, it is neutral. Moving along, let's take a look at commodities. Gold. Downward trend line was broken this week. Not really from a rising bottom. It's kind of from a low, but it's broken the pessimism. That's a good sign. Now we need to see it break through this level from this rising bottom. So it's neutral right now. It could turn into bullish in the short term if we can see that happen. The 3-year weekly chart, however, is still in a bit of a bad mood. The market upward trend was broken, and we've built a falling top since that, so it's somewhat negative in the longer term for gold. How about oil? USO is the ETF that I like to look at, and you can see that the short-term upward trend was broken, falling tops, so that puts it into a negative to neutral market trend. However, the 3-year time frame is above the downward trend line. We do have the rising bottom. It's pretty crowded, like there's quite a bit of resistance over here. So it's not a real strong chart, but oil certainly looks better than gold. It's improving, but it's not a real hot market yet. US dollar, let's look at that next, UUP. And you can see there, bottoms are rising, so it's bullish for the US dollar in the short term. And in the 3-year weekly time frame, we've broken through this resistance, so that's a positive, from a rising bottom. And so it looks to me like the US dollar is going to continue to move higher. Well, Bitcoin is something that many of you like to follow. Here is the chart of Bitcoin, and you can see that it broke this little upward trend. It's been building falling top, so that's a negative chart in the short term. In the long term 3-year weekly chart, we've actually got an upward sloping channel. And so what we've done over the last 6 weeks is pull back to the upward trend line. We should bounce off of that and continue the upward trend. So there's some hope there for Bitcoin investors. We need to see the bounce. We haven't seen it yet, but something to watch for in the next little while. The last chart I'm going to look at is for interest rates, and you can see that rising interest rate environment in the bond market through the month of August and late July, but that was broken this week. You see here on Wednesday, we broke the upward trend line, and we're now starting to build falling tops. If we break down through this floor from this falling top, then interest rates in the bond market should start to pull back, and that could be positive for stocks, giving it a way to stabilize in the stock market. Now looking at the longer term chart, we are still in a bull market for interest rates because the bottoms are rising, but again, we've got a bit of a reversal signal there, and so we could see it pull back. So my ratings then, you can see for all the stock markets, it's short-term bearish, but on the verge of turning, and long-term neutral. For gold, short-term neutral, still long-term bearish, but it could be improving soon. Oil neutral on both time frames because of that breakdown in the past couple of weeks. US dollar bullish on both time frames. Bitcoin short-term bearish, but long-term bullish, and we could see Bitcoin turn in the next week or two. And interest rates, I've lowered my rating in the short term to neutral and still long-term bullish. All right, well, earlier in the video, I said we were going to look at the swing trade of the week. Usually we do the day trade of the week, but this week we had this really hot stock. VFS is the symbol, VinFast Auto. The chart that I have on screen here is a 13-minute chart going back 10 days or so. So we're changing it up a little bit from what we normally do, but I want to show you a few things that are really important for traders. The first thing is these yellow and pink dots. We've talked about those when we talk about the day trade of the week. That's my own indicator. That's called an action candle. When you see a pink dot, that's called a message candle. Now, an action candle means that it made an abnormal price gain with abnormal volume. A pink dot means it made an abnormal price gain, but the volume was not abnormal. And so what we like to see is the crowd coming into a stock and ideally breaking through a line of resistance. And so here you have a downward trend line. It started on August 16th and it pulled back for 1, 2, 3, 4 days. All right. It had started to behave abnormally back on August 15th. So that's why I was watching it. Well, on August 22nd, which was Tuesday, we saw the break of that downward trend line from a rising bottom with my action candle firing. So in our active live service, which we run on Stockscores, and you can learn more about that at stockscores.com, in active live, this was one of the stocks that I said, hey, take a close look at this. I think it's likely to go higher over the next little while. This is a strategy that I have for swing trading. I call it an alpha echo. It's got the alpha, right? Here's the alpha where the volume is starting to increase. Remember at the top of the video, I said the footprints of alpha are abnormal activity. Well, it started to do that there, and then it really picked up again on the 22nd of August. So the buy point was here. Now, I also told you that you have to plan to be a loser. So the way we do that is if we're buying here, we're going to look to the last floor before the stock took off, and that is right here. Now, if this is a negative or if this is an incorrect signal, then we would expect the stock to resume and go back into this downward trend. And that's why we put our stop loss right about there. If the stock falls through that floor, then we've been proven wrong. And that means we need to be a loser. We need to take that loss. So we're going to buy here, and our stop loss is going to be there. Now, this stock has trended higher all week, well, ever since, I guess it was Tuesday. And so we can now judge our success in terms of reward for risk. So what I'm drawing here are my attempt at the space here, which we call risk. Okay, that was our risk. And these are reward levels. This is reward of 1, 2, 3, 4, 5, 6, 7, 8, 9, and this is 10. All right, now I haven't done that perfectly, but you get the idea. So right now, the stock at the end of the week from Tuesday is up about 9.5 times risk. So if we risked $100, we would take a position size that would give us $100 of risk. That means this trade has made $950 so far. If we risked $1,000, then we are up $9,500. You get the idea. So that is the reward for risk ratio. It's an important part of what I teach in the different courses that we do at Stockscores. And again, you can learn more about that at stockscores.com in the trader training area. There's lots of free content in there as well. So go take a look at that at stockscores.com. But what's really important here, two things. One, the stock was abnormal. That was the alpha. We talked about that at the top of the video. And number two, plan to lose. If the stock had fallen down through that support zone, which was at about, I don't know, $14, take the loss. The entry price was here at about 22, and look at this stock. It went from 22 to $70 in 3 days. That's better than a 300% gain. And that's the kind of performance that you can get out of alpha stocks. There's some every week. You have to have tools to find them. You can learn more about how I do that at stockscores.com. Well, again, I hope that you've enjoyed the video. If so, click on that subscribe button, hit the like as well, and let me know what your thoughts are on whether the market is going to reverse here, or are we going to continue in the downward trend that we've been in through the month of August. As always, trade well.